Today you will find out how you can trade the true structure of the market, which works much better than some classic ICT and ordinary smart money. But first, subscribe to the channel, put likes, write a comment to promote this video in the recommendations. Thank you, my friend, very much. So, let's start with what is White Zim and how our structural points are confirmed. Usually in smart money, people are used to trading ordinary swings, that is, such wavy movements, maximum and minimum, that are formed here. But this is not quite effective because they are not confirmed by anything. This is liquidity. As they used to say, buy side or sell side liquidity. That is, liquidity from the side of buyers or liquidity from the side of sellers. And when the price removes this swing, most start to sell, especially when it happens very impulsively. That is, some kind of buy happens. They think that the price will go up. It goes up, but in the future it always goes down. Why does this happen? Because the price always removes the inducement and continues to fall further down the trend. How is this confirmed by our point of oscillation? Everything is very simple. When the price removes our inducement, the lower point is confirmed here. In the downward trend, the first minimum is confirmed. Do you understand? In the future, when the price, for example, goes down, it makes a boss, that is, a rupture of the structure in the continuation of the downward trend, and confirms a new maximum here. Then the price can move and confirm the minimum, for example, anywhere, even here. It does not matter whether it is confirmed here or here. Because the price removes the inducement here. Here we have a range that is from this maximum to this minimum, which we can trade. We have only two order blocks. This is the first extreme. The second is the first post-side zone. Everything between them, everything behind them is a trap. These are SMT blocks. What is SMT? This is a smart money trap. Usually they are on 8ZM. For example, we have 8ZM. Here is the block. The first rule of the strategy is not to sell or not to buy until the inducement is removed. This block is always on it. Again removes. Then, for example, it moves below, makes a boss and confirms a new maximum here. It is also very important to use the range trading. For example, when we do not trade or trade 0.5, if the price does not trade, then this is a correction. It does not trade 0.5. Accordingly, this maximum in the future will be weak. For example, if the price creates a new minimum, removes the inducement. Here we reach the grid 0.5 below. Because the previous range was not traded, it is not effective. Therefore, we cannot pull a new grid. We need to reach the old one until we do not trade it, until the range is not effective. And as a rule, 0.5 coincides with this weak maximum. When the price is removed, in fact, it will be clear. Purely technically. But in fact, it will be a fake break, because only now we are trading 0.5. Here are two options for the development of events. Either the price works out short, makes a boss, confirms a new high here, or it will go up. Because again, we had a technical change in the nature of the trend. And the price will continue to remove the inducement, moving in the upward direction. Therefore, in order to avoid this and trade further down the trend, we need to find a full setup. That is the break of the first roll, removal of this swing, and the movement down. After the update of this low, a new high will be confirmed here. Thus, we can work out just crazy huge positions, which will work out a super huge error. That is 110, 120, even 150. Imagine in Timecode. 50 deposit can be made in one position, with a very small foot. Let's choose an example on the graph. Let's say even here. I already analyzed this situation in the last video. How did it look here? Let's go through it again. That is, we will have a minimum here, because this is the lowest point. We started from it. Now we have to find a new maximum. In order to determine our range, it is located here, because the price has fallen. She removed the inducement. Now we have a clear range. Maximum is this minimum, in which we can work. We have a stream of orders, at which the price of paints went up. She made a boss, updated this high. Accordingly, a new point was confirmed here. This new minimum, clear. Further, we see that the new maximum is confirmed in this place. Here. Why not here? Because if we cut off this half of the graph, we will not see. Our first maximum is confirmed in this place. The price removes the inducement. It concerns this first block. After the inducement, it goes higher. But the update takes place with a shadow. This is the removal of liquidity. Yes. And in this impulse, in this movement, we don't have any rollback here. Therefore, this minimum will be in the role of the inducement. Yes. And the maximum that was confirmed here, it is transferred here. And the minimum is here. Do you understand? Further, we have a boss. A new point is confirmed here. Our model is closed. Further, the new maximum will be here. The price removes the new inducement. It concerns again this stream of orders and goes further. Yes. Higher. Doing here, 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 here. This is our new maximum. The price removes the inducement again. Goes above. Clouds. Doing boss. Confirms a new minimum here. Understood. Yes. Further, this is a new cloud here. Inducement removal. Encouraging sales. We had a fairly long trade. And the price came up. Made a bound. Confirmed a new minimum. And we had a very good release. Impulse. And in fact, some models say that. It's been confirmed. A new most. Right. Well, it's already very obvious here, yes. There seems to be a maximum. But he is not here, because the price did not remove this first rollback. That is inducement. We see that she did not take it off here, did not remove. Therefore, here we have a maximum that is not confirmed. He won't be here. We are looking for a new maximum that has been confirmed. The first, in fact, here in this place, because it was here that the price fell, and she took off this inducement. Made a boss. Confirmed a new point here. And what is all this movement? This is all the internal movement that was within this minimum and this maximum. That is, this is our entire trade range. Yes. Yes, there were secondary movements here. That is, a secondary trend is a trend that goes inside the main movement. There was also a removal of inducement, confirmation of points. Yes, these are all the cases. There were also bites. But this is all internal movement, that is, one movement. If you note the main structure, then it will look like this. These are all purple dots. This is the main structure. This is all one movement. But there is one point here. If we look everywhere at the trade range at trade 0.5, we see that there was a trade everywhere, but here, as you can see, there was no trade. Therefore, we pull the grid higher, 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 higher. We pull, we pull, we pull. We see that the price cannot be updated in any way. Accordingly, the range is not effective, not traded. Yes, it seems that the points are confirmed, but the range is not effective, so it will be necessary to trade it at a higher price. We pull the grid to the highest maximum, which is located in this place. Here is a new point, here is the inducement. In fact, here we already had a choch with the break of this minimum, because purely technically, according to the strategy, according to the structure, there was a break here. But it will be fake, because we have not traded 0.5. We have 0.5, here it is. What does it do? First, it removes the inducement shadow, the minimum shadow. It removes the inducement here in the opposite direction, making these bites to the purchase. Inducement. And it begins to aggressively fall down. That is, it was the perfect point of entry for sale. Our range looks something like this. That is the main one from this minimum and up to this maximum. Clear?